welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, it's good news for the investors of sovereign gold bonds. The first ever tranche of these sovereign gold bonds by the government, which was launched in the year 2015, has now matured today. And those still holding on to their investments have now earned 128% return on their investments in gold via these sovereign gold bonds. So those of you who had invested via the scheme, the first series of 2015 that was launched by the government 8 years ago, maybe if you had just applied for just a single gram of gold via this, you would have shelled out just about 2,684 rupees per gram. Today, you will go home with 6,132 rupees per gram of gold, which is a total or an absolute return of 128% on those investments that you had done 8 years ago. So on a 1 gram basis, you have earned 3,448 rupees, and that too, this 128% return is absolutely tax-free. Now, calculated in terms of the compounded annual growth rate, the return annualized stands at 10.88%. So how much has one really gained? To understand the potential returns, let's consider an example for an investor who may have acquired 35 grams of gold during the inaugural sovereign gold bond offering. Now, those would have amounted him or her at that point of time of investment somewhere around 93,940 rupees at the rate of 2,684 rupees per gram. That was the initial offer price. Now, with the redemption price now set by the Reserve Bank of India at 6,132 rupees per gram of gold, the investor is poised to now receive 2,14,620 rupees as well. So the success of investors in this first tranche of sovereign gold bond is primarily attributed to the remarkable surge in the prices of gold in these last 8 years. The robust performance can also be ascribed to various factors. Of course, increase in gold prices in one. We have seen the gold prices move up consistently over these last 8 years, playing a crucial role in the escalation of the redemption value of the sovereign gold bonds. The second factor is government backing. Sovereign gold bonds benefit from the sovereign guarantee of the Indian government, providing investors a reassuring sense of security and stability of holding high quality, pure, absolute 24-carat gold value in the form of paper gold or in bonds. Now, inflation safeguard is something that gold is always referred to as. It is referred to as a safe haven asset, and gold as a class of asset is frequently regarded as a hedge against inflation too, positioning sovereign gold bonds as a practical choice to preserve wealth in an inflationary setting as well. So sovereign gold bonds are actually one of the most popular instruments to invest in gold in paper form. The long-term nature of the bonds, as well as the additional interest rate, which is an annualized 2.5% interest that investors receive biannually, is an added-on feature of these bonds as well, that ensures that not only does this give a higher rate of return to investors, but that it is also suitable for a wide range of people wanting to invest in gold for a long-term period. Even today, the tax experts and the commodity experts do say that sovereign gold bonds offer investors the best and the most tax-efficient way of investing in gold. And you can see with these historic returns of 128%, and now whether you compare it with any other asset classes, this by far would be one of the safest options and the best options that you can perhaps also even go for now. Already the government has pulled out a couple of tranches for the current fiscal year. Some more are expected, so do speak to your financial advisor and just keep an eye out on the next tranche of gold bonds whenever it will be announced by the Reserve Bank of India. So with that, we will wrap up this special edition. But for such informative videos, do stay on to Business Today Television and keep commenting on our platforms as well to help us understand better as to what would you really like to see as content produced on Business Today.